Today, we're covering major developments across equities, bonds, currencies, and commodities, heavily influenced by geopolitical events. Risk assets saw a boost driven by geopolitical news, while oil prices plunged, leading to shifts across global bond markets. The main driver this week was the developing situation between the U.S. and Iran. Risk assets were lifted by increasing optimism around a potential U.S.-Iran peace deal ahead of this week's ceasefire expiry. However, this market buoyancy might be short-lived, as Iran has refused to re-enter negotiations until the U.S. blockade is lifted, even with signals of openness from the U.S. president. Let's review how equity markets performed across the globe. Key equity markets across both the U.S. and Europe rallied strongly on Friday, reflecting the initial geopolitical optimism. Futures are indicating a positive and strong start for the local market following the gains made overseas. The commodity and bond markets experienced significant movement, largely triggered by oil prices. Oil prices fell sharply, declining by more than 11%, marking a significant move in the commodity space. This sharp drop in oil prices helped trigger a corresponding rally in global bond markets. Bond yields fell across the curve in the U.S. and Europe, and locally, bond yields are also forecast to be lower on futures. Now let's look at the action in the foreign exchange and metals markets. The U.S. dollar index edged lower, marking its third consecutive weekly decline against major currencies. In contrast, the Australian dollar advanced to 0.7174 against the U.S. dollar index, recording a 0.2% gain. Gold edged slightly higher, benefiting from the lower U.S. dollar, while iron ore prices remained relatively stable, around 105 United States dollars a ton. To wrap up today's market recap, let's look at the key takeaways from the past week's trading. The market action was defined by geopolitical uncertainty regarding the U.S.-Iran situation, sharp oil price volatility, and continued weakness in the U.S. dollar index, which benefited the Aussie dollar.